All right, guys, super cool. Welcome to the Independent Investor Channel live stream. It's Friday evening, 9 Eastern Standard Time for anybody who's tuning into this outside of the thread. Obviously, we've got a great, robust discussion going on here. I just want to thank the greatest community in the YouTube landscape. Honestly, man, from the bottom of my heart, guys, really, I want to thank you guys for the opportunity to come on here and talk about personal finance, budget, personal empowerment, really any way that we can strike at any type of personal improvement, whether it be physical fitness. I saw All Good pop in the group here and said that she went for her evening walk. I too was able to catch a weather window today and catch my 3-mile run today. Down a little bit in the stock market. I was off about 7,000 today, but was more concerned with getting my run in, guys, right? So always striking for that perspective and wanting to focus in on what is important. I've got a lot to jam into the first 10 or 15 minutes here, guys. I've got a couple big agenda items for the show tonight. I've got David Oldenburg, who I had the pleasure to meet this week. I'm going to throw his channel up here on the screen now. You guys can feel free to kick over, and I would just ask you to support David. We had about an hour and a half conversation, and quite frankly, if I can glean in one word, what I got out of that conversation, it was inspiration. No doubt about it. It impacted me after I hung up the phone. What a great guy. Great story and really a success story. I know this world is full of successful people, but David absolutely is one of those examples of that. We're going to have him on as our premier guest first thing on. I do see a subscriber waiting in the studio. We'll absolutely get you in there as well, round robin style. But I want everybody to look forward. I'm going to get David in here in about 10 or 15 minutes or so. He's waiting. We had the opportunity to talk this week and talk before the live stream. He's got a great background in personal finance, investing, real estate. He was a talk show personality or radio talk show personality. Really was faced with adversity in his career and persevered. So I think you guys will really benefit from the dialogue and him talking to the community tonight. So I really appreciate it. So for you guys that follow me on the channel, you guys will know that I have just turned out a huge project, to be honest with you. It's been big, and I just launched the independentinvestorchannel.com today. You can't understand how big of a milestone that was for me. Very fulfilling, man. When you work as hard as I do, and you have something like this come to a head, it just really means a lot to me. And we were able to hit the launch button, at least feel comfortable doing so today. This does have some work here, guys, but I do want to highlight a few things within the first 10 minutes of the live stream. I'm extremely proud of this product. This is really aimed at a multi-dimensional set of goals for me to get to the end user. And first and foremost, it's going to be my opportunity to blog. You guys are going to see my very first blog here, Inches Forward. I do encourage you to go in there, take a read over that, guys. It'll take you 5 minutes of personal inspiration time. And again, you know, if I can inspire one person, I'm happy with that. I'm a fairly motivated fella myself. And if I can just provide some of the pages that have helped me go through some of those hard times in life and persevere, and in reflection, those are the ones really that hit home, to be honest with you. And just the opportunity to share my thoughts, I would encourage each and every one of you guys to kick on here. This does give you the ability to actually subscribe to the blog, so you'll be notified here. This was a pretty extensive project. I've got probably about 80 hours into this, built it from scratch. But you can click on this and just follow the blog. Certainly for you guys that have been with me for a long time, the affiliate opportunity is woven into the website as well. I do plan on going into a little bit deeper tutorial on those platforms. I did decide to stay with First Trade. As you can see here, I had basically an international piece come my way, and evidently First Trade is one of very few platforms that is available to our international community. And I've had a bunch of people reach out to me and say, good on you, Ryan, kudos, you got it right on. I enjoy the platform, guys, and I was just going to do away with it really for the simple reason of my short-sighted American perspective here in the States. And I really did kind of miss how important it is to look out for our global subscribers that make their way into the Independent Investor channel. And in a lot of cases, guys, they don't have the opportunities that we have. So I did go ahead and keep this. I did go ahead and keep my account active with First Trade. That will continue to be my YouTube earnings will flow in there and flow into investments. As I've said many times, I have not rendered one dime from the earnings of the Independent Investor channel, and it'll continue to be that. So I'm not going to take up the entire live stream here, but there's a lot that you can gather from this website. I will also just highlight for just a second, we had a live stream on Wednesday night where JMac Investing, and shout out to Jason for really helping me put this project in fast forward for me. I actually ditched an old project and did a radical change of direction. And this is the resulting product that we came up with. But JMac held a live stream on Wednesday, and one of the eventual channel creators, he's in the group here, Randy with Retire with Options. You guys can say hi to Randy. He's Retire with Options. He was actually in the live stream and actually went live for the first time, and it was really cool to put a face with the name. So kudos to you, Randy. You're one of my shout outs of the week for sure in a roundabout way. But you did mention something that I picked up on, okay? You said something about YouTube equipment and how frustrating it can be. I've went through all of this minutia, and starting a YouTube channel, you don't know what equipment to buy from Adam. This doesn't come with a YouTube 101 handbook, and you're provided the 10 commandments on starting a YouTube channel. I would really like to branch out in that opportunity, because I think there's more people searching out and seeking their YouTube opportunity. David, who I'm going to have on shortly, is doing just that. With as much expertise as he brings to the table, he's actually exploring the YouTube opportunity as well. And I'm going to ask him about it tonight. And I really want his insights, because it can really be quite fun. And if you're not doing this to have a little fun, maybe share some expertise, maybe bring some of your network to bear, then I think you're going to be sorely disappointed. I really think that's the secret sauce to success on this deal, is to enjoy the opportunity. But really awesome project. But basically, he was talking about the opportunity to go in and check what equipment. So the equipment that I'm using, like my Logi camera here, I got that from JMac Investing. You go into some of these descriptions, and we all try to share our secrets, you know, with other channel creators out there that might be like, hey, I need to know, you know, what webcam to use, or I need to know what lights to use. How do you get such good lights in your studio, Ryan? Or in my case, my living room, right? We haven't quite graduated to a professional studio. We will someday. Here's to wishful thinking. But if you guys want to know the actual equipment that I use, that's also rendered on the website as well, through the Amazon storefront. There's obviously the merchandise on there. I was accused of making all kinds of money through YouTube selling merchandise. It's just amazing how far from the truth that actually is. I actually went through and designed all of that merchandise myself to actually wear on the channel. It had nothing to do with selling to people, but I've had a few folks reach out to me and said, hey, I think I'm interested. I can see my thread on my Apple computer kind of blowing up right now. So that means a lot to me, guys. Cost you nothing to go in there and subscribe to that blog. I really appreciate it, man. I really appreciate the support. You know, I'm investing in this channel, but furthermore, when I make those investments for you guys. I really do. And the opportunity to revolve around this topic in another creative way is absolutely intriguing to me. And this has been a project that I've kind of had on the back burner. You know, you can't focus on everything at the same time, but this has been my focus for the last, 3 weeks or so as I've been constructing this. So shout outs to you guys for sure. And Randy, go in there and check that out. I know Randy does have some plans on coming in and sharing some of his knowledge about options. So all the best to you in your endeavors. You know, I've got your back. I'll help you, whatever you need to do. And good luck to you, because it's a lot of fun, man. It's very rewarding. And the root of my interaction on the Independent Investor channel with y'all make it all the more worthwhile for me. It really does. The opportunity to come and share my story and evolve with you guys means everything. It means even more when you can turn it back to me and say, hey, Ryan, thank you so much. I wouldn't have found this opportunity without you, or I wouldn't have felt motivated enough to get going if it wasn't for you. And that to me, man, very, very humbling. All I can say is from the bottom of my heart, thank you so much. I really appreciate that, guys. So with that, I think what I'm going to do is I'm going to queue up David a little bit and let him get kind of settled in. And probably in a minute or so, I'm going to bring him on. But thank you for whatever support you guys can render on that. I really, really appreciate any support that you can give me on that. I worked really hard on it. It does have kind of a multifaceted function, but I think for you guys, the real takeaway and the value is going to be in the blog articles that I'm going to start writing. So really, really appreciate that. So without further ado, guys, I do want to do quick shout outs real quick within the first 15 minutes. I've got Financial Investor in the group. I've got Brent. I've got our new channel, Adriana Gorin, as well in the group. So shout out to you. Congratulations for finding your way into the Independent Investor live stream. I guess it's the best kept secret on YouTube, I guess. I don't know. But we make magic every Friday. There's no doubt about it. And once I get my diesel engine started, it's on. You'll have my devote attention. And hopefully I can live up with the billing when I bring David on for sure. I'm bringing on a true professional here, so I'm really looking forward to it. But I've got Gen X Dividend Investor as well in the group. Super awesome. Just really appreciate all your staunch support. JMac Investing as well is in the group. Passive Income Investor. Kyle, keep on cranking out the videos. Again, I do not know how you do it, brother, but keep doing it. You are absolutely grinding YouTube right now. So whatever works, man, do it. That's the key. I did see Ryan Giffen just pop in here as well. Don't want to miss Ryan. As well as GW Life TV. I got Jerry in the group. So if you guys have questions for any of these channel creators, don't hesitate to at them. And if you want to direct a question at them, you can do that. And if you want to direct a question at me, while I'm allowing David to kind of introduce himself, I'm going to kind of scour through the comments here and see if I can get some folks thrown up on the live stream and get some folks acknowledged that way. Because this live stream is becoming a little bit of a thing. And for that, I thank you. I think that's fantastic. When we start doing these live streams and we have like 15, 20 people in here, I was the same person, same effort, same energy, same acknowledgement to how important this topic is to at least spend a few minutes. And when I say a few minutes, I do absolutely mean to put into context the fact that we will talk on this live stream for the next 2 hours straight. So if you're new to the live stream, welcome, enjoy, open your mind a little bit, evolve. If you have questions, throw them in the thread. Each and every one of these folks will be glad to help you. I've got Rebecca Waters with Quest to Fire. And then I did see a new icon actually pop in here with M Investing. So hopefully I got that right. and hopefully you are in fact a channel creator. Freaking A, welcome. I do absolutely mean that. This community is absolutely rocking. If you wanted some of the hottest cooking tips, you could have tuned in prior to the 9 o'clock live stream kicking off, as Dave with Hidden Freedom Investing and Gen X were going back and forth on who had the best bone broth recipe. So that was interesting enough. But let's dial it back. And without further ado, man, I will bring Dave into the stream here, and we'll introduce Dave to the community. Awesome. Dave, how are you?
Hey, Ryan, it's great to be here. And, you know, I was thinking we were going to talk investing, and then as soon as I heard bone broth, you had my attention. I'm a big bone broth fan.
Mm-hmm. He said, "You ever had it? It's incredible." You know, it's like, you never know what you're going to get, man. You put these live streams out there, and that's part of what I like about them is the dynamic. It's kind of a lot like investing. You know, if you put a good plan in place and you put something out there where people can gather and talk about this topic, which I don't think gets talked about enough, Dave. This is that opportunity. But Dave, please introduce yourself and tell the group what your channel's about, and we'll kick it off from there.
Well, my name is David Oldenburg. And first off, Ryan, thank you so much. Thank you for bringing me on. You had a wonderful conversation with you on Monday. On Monday, you were talking about your independent investor channel. You were working away with it. And it sounds like, and seeing it tonight was great. Obviously, that hard work has paid off.
Thank you, David. I appreciate that. It's a work in progress, as anything worthwhile. It takes time.
It looks good. Well, anyway, my name is David Oldenburg, and my YouTube channel, you can get to it at flippingacademy.com, kind of like house flipping, flippingacademy.com. Although kind of what my focus is really business, personal finance, and investing of all kinds. I started out kind of about a year and a half ago, thinking that I wanted to focus strictly on real estate and real estate investing, flipping, wholesaling, and different real estate strategies. And what I've really realized is I think it's too narrow. You know, my expertise is so wide that it doesn't really make sense just to go out and speak about real estate. The other thing is that I find it so exciting talking about a lot of the current event stuff. So, you know, something breaks and I want to be able to talk about it, especially if it's personal finance or business related. And so I kind of made the decision that I wanted to kind of do this channel with a wide net, even though I'm hearing from a lot of people that that's not the best YouTube growth strategy, that you should start out narrow and then go wide. So I guess like a lot of other things in life, I'm doing it the wrong way.
You're doing it your way. And I had all the experts coming and telling me how I should do it, the way I should do it. And I was like, hold on a second, man, that just doesn't feel right. And the second that I tried to deviate away from what I was trying to do with my program and my process and telling my story the way that I wanted it to be told, because you're right. Everybody will tell you that's the wrong way to do it, Dave. That's not what everybody's seeking through search, right?
Right. Well, and you know, a prime example of that is, and I mean, I have a really, if you go over and see my channel, I mean, I think I might have hit 610 subscribers today. It's a small channel. And I had Matt Money on, who you had on last week and about a week ago, and we did a video on his Cardone Capital investment. Yeah. And I was actually really excited because that has been my #1 video now. Basically, up until that point, if I cured cancer, I got 3 subs. I mean, that's just the way it is. And it's painful in the beginning, but I'm finally starting to see a little bit of traction. So I feel like maybe I'm at I'm that little tiny snowball starting to go down the hill.
Yeah, I commented today, Dave. I don't know if you saw my comment, but it's just ironic with a guy that has as much expertise and as much information to bear to somebody who's interested in those topics specifically that you do. But you just started, right, Dave? You haven't been doing it that long, yeah?
I actually launched the channel, sadly, a year and a half ago. I did 1 or 2 videos and then did nothing for like a year. And I really did nothing because I couldn't really get motivated about what I wanted to do. You know, I did a video on flipping a house, my very first video, and it went really well. And I mean, I got a lot of feedback on it, but then I didn't really know what I wanted to do next. And I went almost a year. And then, you know, this last summer, I did a few more videos, and then I kind of had a big break again. And so I really kind of, after the first of the year, I said, you know, I want to get serious. I want to do at least 1 to 3 videos a week, which I'm doing now. And
why, Dave? Why?
What's that?
Why? Why get serious?
Well, you know, for me, my whole background and all the success that I've had has always been it's all been based on building audiences in different, you know, I go back to, you know, 25, 26 years ago, building a big radio audience and, you know, from a talk show. And then later building an audience in the mortgage industry. I you know, built a big company, you know, that we discussed. 5 years ago, I launched a real estate investing group where I speak every couple months on stage for that. And I grew that group now to about 2,100, a little over 2,000 members. And all of my success has come from networking, doing basically, Ryan, what you and I are doing right now, which is just getting to know each other, talking, sharing our expertises. And, you know, when we talked the other day, and, you know, you said to me, I heard you talking at the beginning, and you said, I learned a lot from David, or I think you might have used the word inspiring.
Absolutely.
But it was completely the other way for me as well. You know, I got off the phone call with you, and I remember coming home, and I was talking to my wife, and I said, man, I really like this guy, and he's doing some really cool stuff, and he's got a great story. And so I think just getting out there, you know, being old school like myself, and Ryan, I'm older than you. I think you said you're 42.
Yeah.
Okay. Yep. I'm 53. So I'm 53, and so, you know, I got out of high school in 1984. And when I first got into the business world, it was really old school. I mean, no computers, no internet, no cell phones, no social media. And how you built business, how you became a success is by being good at I say socially, but not social media. I mean, one-on-one, face-to-face, and being really good on the phone. And I developed those skills really early. And fortunately, those skills led me to a multiple 7-figure career.
Do you think the skills built on themselves, David? Because it seems to me, okay, 53, that's really, really relative to me. I don't typically put a whole lot of value on a number, especially that one, because you seem pretty hungry. But the challenge of YouTube in the greater context of, it seems to me, you strike me as somebody that's just continually hungry. And that's an interesting thing. You know, if you have those successes and you build those businesses up, and this is typical, you're not the only one that builds successful businesses. It somewhat becomes addicting in a good way, you know, because you're turning back a great service for people and you want to get on to that next project. Is that fair enough? And do your previous successes, do they render themselves the lessons that you've learned to future projects, so you can kind of know where to go, where to point the bow of the ship? You know, if you start to, this really isn't going to work. Let's look at this way.
Well, you know, going through the last downturn, the Great Recession of, you know, 08 and 09, at that time going into that, I owned a very successful mortgage company. I was the CEO. I built it from scratch. I had 50 employees underneath me, making more money than you should be allowed to make, and doing really, really well. And it all kind of came to a head about 2010 when the market had changed a lot. About 90% of the people in the mortgage industry, due to the Consumer Finance Protection Board and all of their rules and extreme compliance, about 90% were getting out of the industry. And I had to make a decision, you know, do I want to keep doing this? And I'll be honest, it wasn't fun anymore. It wasn't fun. It was painful. I didn't want to do it. I had made a lot of money, and I exited and I got out. And I kind of thought, you know, it's 2010. I was I guess I was 43 years old, and I definitely didn't want to retire at that point. But I kind of just took it easy for a while, and I really quick, I thought to myself, I can't do this. I'm not a retiring guy. I'm not, and I hate to even say this because this is going to tell. I feel stupid.
I love it. I love it.
I feel stupid even saying this because Google Plus failed, right? Google Plus was a total failure.
Yeah.
But at the time it was hot. And so when Google Plus was hot, I did a live video show called the Online Money Show. And we talked about investing and social media and all kinds of stuff. Built the audience up 50, 60, 70,000 people. I did a show every week. It had a good audience. We'd get 500, 600. Well, actually, I think we maxed at 500 comments, but it would always max every show. I felt really successful, and I did it for free. And I did it just as something to do. And I thought, I'm going to build this audience really big on Google Plus. And then, of course, Google Plus just started to do the downhill. It was like WorldCom or something. And so I ended up, getting out of it. And I sat there for a couple of years thinking, well, what do I do? Well, I was doing tons of real estate investing, buying houses, selling them, flipping them. And then I thought 5 years ago in 2015, I thought, I'm going to launch a real estate investing group. That would be fun. A couple of guys sitting around a round table pizza, talking about real estate. And that group grew so fast that now, I'm in a room that holds over 500 people and I'm on a big stage, and it grew so fast it got out of control. And so I don't have the luxury of being able to go out and speak to just a couple of people now.
Yeah, that's incredible. How much of your success, David, would you say you would chalk up as luck? Because let me premise that conversation and that question and say, it seems like guys like us, because I consider myself successful as well. No doubt about it. I have for 20 years. Now, am I financially successful? Well, I don't know. Perhaps maybe if you took me over and put me in the Philippines, yeah, maybe, but that's relative in and of itself. I think we're fairly lucky living in the States here.
Yeah.
I spoke about a little bit at the top of the live stream, but I think you spoke to me about some adversity and overcoming that adversity. I mean, you were straight up told you're not that good. You're not that good. Let it go. You know, can you talk a little bit about that? Because it seems to me that you can do one of two things. Either you can tuck tail and walk the other way, or you can kind of do what you did, but it took you a couple days, right? Because this was a mentor of yours, somebody that you really, really respected. It would be like Ryan Scribner calling me up and saying, Ryan, not too good, bud. Hang it up. It's not working. That would really, really hit home. Can you talk about that a little bit, man? Because it hit me. I thought it was really good.
Yeah. Really what it gets down to is I came into in another life when I was really, really young. I started out working as a paramedic. So I was working as an advanced life support medic, and I did that for some years in my really early 20s, and I got really good at it. And but I really didn't see a future unless I wanted to stay in the medical field, which I really didn't want to do. And I really was excited about real estate. So I got into real estate. I started out initially as a lender, doing FHA, VA conventional loans back around 1989, 1990, about 30 years ago. And the market, I don't know how much you remember about the market based on your age, because you would have been pretty young at this time. But in California, in 1994, we went into a real bad real estate downturn, and it lasted for about 2.5 years. So from 94 to 96, our real estate values in the Sacramento area imploded. They dropped about 50%. And I was working in lending, and the lending just kind of fell apart. And I was thinking to myself, Ryan, how am I going to make money? I let my paramedic license expire. I started out making good money as a lender, but I was in my early 20s and I wasn't banking any of that money. That money was, I'd make it and I would spend it, make it and spend it. And then the market turned overnight. All of a sudden, Ryan, I was broke. And I was thinking, I have to reinvent myself, and keep in mind, what was I, 25 or 26 at the time?
Wow.
Thinking, I've got to reinvent. I got to find another way to make money again. I've got to survive. I have to pay bills. And as luck would have it, a guy out of the blue came up to me, another mortgage guy, and he said, "Hey, let's do a radio show together." And I thought, radio? Man, I don't know first thing about doing radio.
Yeah.
So we ended up on this little tiny radio station up in Auburn, California, kind of a small town north of Sacramento. And I'll be honest, I don't know if there were 3 people listening to us when we would do that show. It was a very small station. We never had any calls, but something great happened. You know, it's kind of like doing YouTube videos when nobody's watching. You get a chance to learn the skill. And so I got good behind a mic, and I got comfortable talking behind a mic. And one day I left that station and I said to myself, if I could get on a bigger station, maybe I could make a go of this. A couple of days later, I'm talking to the general manager of one of the biggest radio stations in Northern California, and we hit it off. But it's paid programming, so of course they want your money, and they wanted for a radio show. And Ryan, this was a lot of money to me at the time. They wanted $2,000 a month, and Ryan, I was 25 years old, and this is 94, 95.
Yeah.
I didn't have the money, but I really wanted that radio show. So I thought, I've got to get creative. And so I went out and I found a guy that wanted to partner with me. He was going to co-host. We decided to split the cost. We went out and we got a couple of title companies and an appraiser and some people to sponsor $1,200 of it. And we each split $400. And I said, man, we're going to sign a 6-month contract and do or die. We're doing a radio show on this big station. And so I was excited, pumped up, go to do my first day. I thought I did a great job, but of course, no phone calls. Next week, great job. I thought, no phone calls. Gets to be the 3rd week. And I see this guy. I get to the radio station. It's the weekend. Nobody's there. And there's this guy, and I recognize him right away because he's kind of one of my idols at the time. A guy by the name of Lou Diamond. His real name is Lou Gazicki, but his stage name or radio name was Lou Diamond. And he was a guy that was known big in the Sacramento area for a big morning show. He was a big personality on the radio. And I see him at the station. And then I had to go do my show. Well, he was in the studio doing voiceovers for people. He was doing commercials that he get paid for. And after the show was over, I thought, this is my big opportunity. I'm going to go talk to Lou. And, now that we're both radio guys. And so
both in the big time.
Yeah. And you can see where this is heading.
Yeah.
So I go to Lou and I introduce myself. I'm like, Lou, I'm a big fan. And we talked for a little while. And I said, Lou, did you get a chance to hear my show? And Lou said, absolutely, I did. And I said, Lou, I want you to be honest with me. Don't hold any punches or don't hold back. Just tell me what you thought and be honest. And he looked at me and he was very friendly and he smiled and he said, do you want to hear the truth? I said, yes, I do. And he said, it was the worst radio show I've ever heard in my life. Ouch. And when your idol, your mentor, somebody you look up to looks at you and just tells you, you suck. That's basically what he said. And so I left. Almost wanted to give up. Next week I came back. I did another show. I walked up to Lou. Lou, how did it sound? He goes, you're just not getting any bigger. The best thing you can do, cut your losses, save your money, and go back to doing real estate and mortgages. You're never going to make it in radio.
Dang.
And about a month into it, I decided to get smart. And here's a good piece of advice. I shut up. And I looked at him, and this time I didn't ask him if my show was good. I said, Lou, what do I need to do? And he looked at me and he smiled and he says, you need to hire me to mentor you. And I said, well, I'm spending like $2,000 a month. I'm broke. What do you want? And he says, I want $100 a week. And it was painful. I did not have the money, but I started having him mentor me. And he taught me everything I was doing wrong in radio. I was too methodical. I never cracked jokes. I wasn't approachable. Nobody, he told me, he said, you can't be that serious and expect people to like you're doing the 6 o'clock news. And so I lightened up a little bit. I changed my focus. I started getting better on the phone calls with the people. And lo and behold, 30 days later, I got my very first call. I remember it like it was yesterday. It was 1995. And a woman called me up after I finished the radio program. And she said to me, I listened to your show driving home from vacation. And she said, I was in the car and I'm looking to refinance my house. and I really like the way you sounded, and I would love it if you could do it. And I went literally that day after the radio show. I drove to her house, took the application, and 30 days later it closed, and I made a couple $1,000s. And it dawned on me at that point, I can make money doing this. And it just slowly, I mean, it wasn't like it took off when I was this big successful guy, but I did that radio show for 7 or 8 years. And I took it all the way to being sponsored. My show was fully sponsored by Vanguard Mutual Funds, a $1 billion company. Securities America, I don't know if they were a $1 billion company, but very big. I had a waiting list of sponsors. The show became crazy. I worked it into a 7-figure business and then launched that into another career. And just, you asked the question, was any of it luck? Hell yes. A lot of it was luck. I was lucky to have the guy come to me that said, do you want to do a radio show? I was lucky that I ran into Lou Diamond that day. I was lucky that I made a lot of the money that I had made during the best years in real estate that we'll ever see, 2000 to 2005.
Probably, yeah.
So I'm sitting here as a guy that worked hard, very hard to get to where I am, but I wouldn't be where I am if I didn't have some luck.
Would it be fair to say, David, too, we talked a little bit offline about the conferences and the speeches that you hold. I mean, people come and they want to hear you, as I would. I would love to come to one of those and hear one of your talks, but you offer those free of charge.
That is correct.
Is there some level of, it seems like you're the type of guy that wants to give back. Is that a fair statement? Or is it when somebody comes up to you and says, hey, I really related with what you said. Thank you. It inspired me, not to take my words, but why do it, David? You know, is that the reason?
You know, there's a lot of marketing behind, and this is going to make me look bad. It's going to make me look like I'm not doing this because I want to help people, and I do it wholeheartedly for that reason. But yeah, but I'm speaking to your viewers right now, because I was watching those comments as you were talking, and I've been to your channel. I've watched a few of the videos. I watched your live stream last week, and your channel is filled with entrepreneurs. You know, people that are investing, people that are on YouTube, people that are trying to make money. And one thing that I hear so often, and it's sad that I hear this, and it comes, I think, from, I'll say, the younger generation, and for me, younger is 35 maybe, you know, 35 and younger, maybe even 40 and younger, is that their first thought with everything they do is, how do I monetize this?
Yeah.
You know, and so one of the most common questions, well, probably the most common question I get from most people, especially at my live events, is, will you mentor me? Do you mentor? Do you coach? How much would it cost? Can you teach me? And the answer to that question is no, I don't do it. I'll get into that maybe later if you want to, why I don't mentor and coach people one-on-one. Yeah. But the second question is, I don't get it. You know, you do these live events, tons of people, you know, you've spoken to thousands of people, and you not only, they're talking about me, I not only put these events on for free, in other words, everybody comes in for free, but I pay for the big hall that we have the room in, and I pay for all the marketing. So I spend about $1,000 every time I put on an event out of my own pocket and still let people in for free. And so the question I get is, why don't you monetize it? Well, here's the thing. It is monetized. Sure. And I'm going to tell, if I have time, I'd love to tell the story about the deal I did where I made a ton of money a few months ago. If that's okay.
Absolutely.
So one of the people in my group, actually a real estate agent, called me up a while back, and he said to me, hey, Dave, I love coming to your meetings. I've learned so much, and I have an opportunity to buy a property, but it's out of my area. It's out of my league. It needs too much work. But if I were to bring you down and show you the property, would you be willing to buy it and pay me a referral fee? And I said, sure, if I can make the numbers work, I'll pay you a referral fee. And I said, how much do you want? which is always my question. I never shortchange people, or I never try to. I'm never going to tell you what you're worth. I'm always going to ask you, what are you worth? What do you want from me? And if it works, then we'll do a deal. And so I asked this gentleman, I said, what do you want? And he said, I want $10,000. And I thought, man, that's a pretty steep. I don't even know if I'm going to make any money on this deal. But I said, tell you what, I'll pay you $10,000. I said, the close of escrow, before I do the deal, before I make any money, I'll pay you $10,000 cash right up. Well, cashier's check right up front. And so I worked a deal on the property. I got it, and thought I was going to be able to do a little bit of work, do a strategy I call wholetailing, which is a hybrid strategy. Do some work, get in and out of it within a couple weeks. And I thought I'd make about 30 grand. Well, when I get down to the property and it's 3 hours away from my house, I don't know the area. And I'm down there, kind of just checking everything out. It needs a lot of work. And the neighbor comes over and he says to me, how much did you buy this property for? And I told him the price, and he looked at me and his jaw dropped to the ground, and he said, he goes, man, nobody sells properties that cheap around here. He goes, how did you make that work? And I kind of explained the situation, and he said, do you know this is the nicest part of town? This is like the Beverly Hills of this area. And I said, really? I didn't know that. I started doing some research and found out that, I had struck gold.
Yeah.
And so I ended up taking that property, doing very little work to it. I put 10 hours of my own labor. Well, my son and I, we put about 10 hours of labor into the property, did very little, cleaned it up, fixed a couple things, did a little bit of dry rot work, repainted the interior, and we probably put $8,000 into this property. 2 weeks later, put it on the market. Ended up selling it after all expenses, including the $10,000 referral fee. I pocketed $160,000 in my pocket. Now, the reason I say $160,000, I mean, I'm used to doing deals and making a lot of money. It's the business that I'm in. Yeah. I mean, for me to make $50 or $70 or $100,000 on a deal, I do that all the time. Yeah. But 160 was my biggest ever. I was really excited. And the reason why that, to me, that's so important is, again, going back to these people that say connections. And David, how come you don't monetize? I just monetized $160,000 in my pocket by giving away my knowledge for free. And so
for real, but the network piece too, Dave, you had a colleague who thought it wise to pick up the phone and give you a shout, right? It's that network piece of it. So there was some expertise on the realtor's end as well, right? Yeah. To make that connection too. So I think there's a little bit more into it than that. And I think my question was more, I just think it's cool as hell. I think it's smart. I know why you do it. So it's a rhetorical question from me. I think it just sounds like more of your wanting to give back a little bit, I think, because you feel like you can. And I think that's real. I think that's legit. I think that's real cool.
I'm laughing. I see one of the comments here. The guy says, I'm falling asleep. I'm sure he's talking about my stories. And they probably are here going, oh my God, it's the investing channel. We want to hear about stocks and bonds. And what they might not know is that I'm a former licensed stockbroker. Yeah. And do I know stocks, bonds, mutual funds, treasuries, ETFs, you name it, I've done it. And so before he falls asleep any longer,
you're never going to make everybody happy on social media, Dave. Never. Well, I want to just add something to what you said, though. 160,000. That was a big deal, right? To give anybody a big head start. Something that I don't talk about very often. And I know Meet Kevin. He's a sponsored channel of yours. I like the channel too. It's entertaining. It's great. I'm super motivated, super ambitious. I feel like energized when I watch his channel because he's just like going 100 miles a minute.
A lot of energy.
But a lot of people don't understand when they tune into my channel, and I do advocate for building a very sizable net worth on a blue collar salary. Okay. But what I don't typically talk about is that my biggest deal in my life was a single family real estate deal where I bought in Detroit. I think I had mentioned this to you during everybody. I mean, there was bankruptcies Every other house was a short sale, man. It was crazy. And you had investors that knew that the market was recessed. So you had people with means that were really trying to hawk. So people who were coming in to the market at that time, like little old military guy like me trying to bring his family in to live in suburbia, we really had a tough go of it. And long story short, there is that the wife of the spouse who was deceased was a military veteran.
Wow.
So found out that I, in fact, was a military veteran and ended up taking our VA loan over at least one out of the 5 cash offers, right?
Wow.
So chose our deal. But that ended up netting us a pretty good 65,000. Now I've been able to leverage those profits. So the ability, I think the takeaway for the audience, and I would push back a little bit and say that this is not boring. This is real talk. And if you're entertaining me, you're good to go, man, because I think just trying to push the envelope and let people know that, and I know Meet Kevin talks about this too, the importance of real estate investing, not necessarily being big commercial real estate all the time. Your single family home can be looked at as an investment. And it's amazing to me how many people don't necessarily look at it that way. Don't look at the improvements that you made. And I approved this property to a T. I mean, I had the flowers blooming when the finance appraiser came in and we closed that deal, for sale by owner. I didn't go through a realtor. I sold it myself.
Good for you.
Which pocketed me an extra $8,000. But I don't disclose that a lot on the channel. And I think people will understand a little bit more that if they just evolve and open up their perception about always just being cognizant of those opportunities that may be around you, because they may not be the most obvious. I didn't go into that deal, Dave, thinking that was going to be my biggest deal. I've had a lot of stock trades where I've made multiple thousands of dollars, and that's fine. But those really do help accelerate that building of wealth. And I think that's important.
I'm an avid. I think I told you I'm a stock junkie. I love to trade. I trade a lot. I'm more of a swing trader. I'm definitely not, the buy and hold guy. And sometimes that would be to my detriment. I think over the years, I still kick myself because I was, day trading Amazon back in 1999. And I thought if I just would have bought the damn stock and held it, I was so excited, trading Amazon for $100 or, $200 back in the day. And I look back on, I think, Dave, if you would have bought a couple thousand shares of Amazon in the beginning of 1999 and just sat back and never traded again, you'd be miles ahead in trading income, than where you are right now. But
woulda, coulda, shoulda, right? Hey, Dave, this is Jaden Craig. He's a new channel creator. He actually came on with me and was a guest on my channel a couple weeks ago.
Okay.
Super awesome, ambitious, young, hungry. And I would do for him what I would do for anybody and support his efforts. Will you take this question, please?
Absolutely. It's a really common question. And actually, I've done live events on Airbnb. I've spoken about the opportunities in there. I have a really good friend of mine that is very successful at Airbnb in the Silicon Valley area, higher end furnished rentals on the Airbnb side. So I like Airbnb. Now, there's a problem with Airbnb right now. I don't know if any of you guys read the blog Zero Hedge, but there was an article the other day talking about what they call the superhosts and how some of the superhosts, people that are highly leveraged and have lots of properties, some of these people are imploding right now because they're not able to rent these properties, but they're leveraged. They're leveraged really high on these. And so one of the business models that people have been doing with Airbnb for a while is you buy a property that you think will cash flow, or it's close to cash flowing if you get the good Airbnb rental income. And then, people make the payment for you, and hopefully 20, 30 years later, the property is owned free and clear, but you still have this incredible Airbnb income. Problem with that is the problem that a lot of people are thinking might happen right now with Grant Cardone and people like that. And it's buying real estate and buying it in such a way where you are too leveraged. Works great when the market's going up. Everything works when the market's going up. Every strategy works
I mean, is it is it easier to get over levered when you're working with $100 million property or $130 million property? I mean, how much margin for error do you really have, Dave?
Well, it's harder to sell. Everything is, for those of you, obviously we have a lot of stock traders here, a lot of investors, and liquidity is the name of the game. I mean, if I'm guessing some of you have gotten into a trade, and then after you got into the trade, you wanted to get out and you realized, oh my gosh, it's difficult to get out of this. We have this massive bid ask, what do you call that? The spread, a massive bid ask spread. The volume is low. The market makers are controlling everything. And you're like, wow, I'm going to lose money getting out of this because I didn't realize it didn't have liquidity. You buy $100 million property or a $200 million property, and I can tell you, I've been in that world. And how many people you think can buy $100 million property?
Yeah,
not many. Now, on the flip side of that, if I'm buying in my area, buying a $250,000 or $300,000 property, fixing it up and trying to sell it for 400 or so, that's that sweet spot in my area of California. And everybody wants to buy at that price range. I can turn that house in a couple of hours if I just drop the price just a little bit. And so, getting back to his question, can you pop that? I just want to see what his question was. The last part of that. I'm not sure if he asked me if I thought Airbnb was a good idea. I'm not sure if that was part of it or not. Your opinion on rental properties, Airbnb. Okay. So if just with rental properties, just in and of themselves, I love rental properties if they're bought right. But remember, I'm an investor. I'm a flipper. So the average price that I buy a property for, and I think I even have a video on this, is about 100 to 150,000 under market in my area. So if a property is worth 400 ARV after repair value, I'm going to pick that property up for between 250 and 300. First thing people say is, yeah, but there's no properties out there listed that cheap. That's where networking, getting properties off market, networking with other investors and realtors and wholesalers. And if you do that enough, you start to get those deals. They're not easy to find, but they're out there. And so to answer your question, if I love rental properties, but I in this market right now with everything going on, would I buy a rental property $10 or $15 or $20,000 under market? No way.
Yeah.
I saw the market between 2008 and 11 in my area drop 50%. And when we only had a default ratio on mortgages of about 5%. We're now at that point already in the mortgage market, people asking for forbearances, and we're looking at a potential of having a default rate this time as high as 20 or 30%. So we are early in the game. I'm telling you, do not buy real estate right now unless you get the deal of the century. If you don't get the deal of the century, hold tight. I bet by the time we get...
I'm there, man. I'm in Virginia Beach, man. We're in an apartment right now. The last two properties the only two properties I've ever bought have been single family, one in Houston, Texas, and the other in suburbia Detroit. Now, my station assignments have taken me to New York City, and I'm good, thanks. I can't play in that market. And then here in Virginia Beach, I was really tempted, Dave. I really was. 50-50. We had an offer on a house for 20 minutes or so, and we just couldn't see the value. And we've opted to just let this thing ride because I just think the market's high right now. That's just my sense.
I'm laughing at this comment from, is it Freedom Finance? It says Grant Cardone wants slaves. I kind of agree with that. I think in a perfect world, Grant has a very big ego, and I think Grant likes to control people and likes people looking up to him. Although I will say, in fairness, not that I'm bitter, but Grant has a lot more money than I do. So I'll give Grant respect for that.
Is that true? I mean, does he actually have the money?
That's a good question. You're right. I'm not sure if I'm answering. I don't know how much liquid money he has. Right. So I don't know. Is he a guy that's controlling $900 million in real estate, but he only has, 25 million of his own money, or 10 million. Honestly, I don't know Grant Cardone's numbers. But I'll give the guy, I mean, he does these events and his 10X events, and he brings tens of thousands of people into a stadium. And, so no matter what I think, I disagree with him on a lot of things, but I applaud him and respect him for what he's doing because he's knocking it out of the park in other ways.
Sure.
And but that comment's great.
That's great.
You know what I thought would be really, I was thinking before today, I was thinking about, what would be something that somebody would want to hear on your channel, that's kind of investing related. And I thought, well, some of the people might want to hear some of my trading strategies, which if you want to talk in a few minutes or whatever, we could, but I thought I would share two quick stories. One is my greatest trade and my worst trade.
Nice.
And which one do you want to hear first?
I would go with the worst first.
Okay. It's 1999 and it's the .com era. And, it's 21 years ago. I've been trading stocks for a little while and stuff, and I'm experienced. But I mean, I don't have the sophistication that I have right now, and everything's going up. I mean, these .com stocks, internet stocks are just every day they're going up. They're going up, and I'm watching CNBC, and Ameritrade, ticker AMTD, is trading. It's had a good run. I mean, it's had a run like crazy. It's trading way above its valuation. It's not making any money at all. And everybody is saying this stock is going to implode. And I thought, I'm going to short this stock. I'm going to short Ameritrade. And so I think it was trading at $65 a share. And I shorted 1,000 shares. Now, normally, I would sit around and I would watch, if I was short a stock, I watch it very closely.
Yeah.
But we had my son at the time. My son was born in 1996. He's 3 years old. And my wife had put him in one of these like jamboree things. And, if you're the dad and you don't go with your kid to those kind of things and your wife, you're looked at as the bad guy. And so my wife came to me and said, hey, he got his jamboree class. You probably want to go to it. It's only an hour and a half long. And I looked at Ameritrade and it wasn't really doing anything. And I thought, okay. So I hopped in the car. I left for 2 hours. I come back, fire up my computer. I look at Ameritrade and it's not trading at $65 a share. It's trading at $100 a share.
Ouch.
It's up $35 a share. I have 1,000 shares shorted. I'm negative $35,000 in 2 hours.
Yep.
And at the time, I didn't have the capital not to close out that position and wait it out. So in 2 hours, I lost $35,000. And it was by far my most painful day of trading ever. And I've learned a lesson. And I will tell you, that was 1999. I have never shorted a stock in my life since then. Ever.
Yeah.
And so that's my bad trading story. Now I got a good trading story that more than made up for it. It's I don't know, maybe a year after this, or it's after this, but it's not terribly long. I don't even remember the exact date. But I'm working in the mortgage industry and the investing industry, and it's my time. The stock market closes at 1:00 in the afternoon, my time.
Yeah. Yeah.
And I get a phone call from a friend of mine at 12:30 in the afternoon on like a Tuesday or Wednesday. And I know this guy a little bit, and we kind of trade trading stories. We both kind of looking to make a few bucks. And he says to me, he said, Dave, I don't know if this is true, but he says, I heard from a friend of a friend of a friend who knows a CEO about this company, and supposedly something good's supposed to happen tomorrow. And I thought, man, this does not sound real reliable. And I look up the stock and it's one of these thinly traded, not doing a lot. And I thought, man, if I buy this stock, I'm going to get killed. Okay. Stupid Dave at the time decides that I'm not going to buy just a couple shares. I'm going to buy 5,000 shares of this stock 5 minutes before it closed the closing bell. It's trading about $18 a share. Okay. I go home. I'm like, man, I hope this stock does something over the next couple days. I wake up the next morning, CNBC's on. I do eat my breakfast. I do this kind of stuff. And they have that little, that little running ticker on CNBC.
Nope.
And I'm watching that. And all of a sudden I take a double take and I'm like, wait a minute. Is that the stock that I bought yesterday? And I'm like, I think it is. It's up 100%. It's up 100%. I've just made $100,000 on a trade, and I've owned this stock literally for 15 minutes. And so the market opens, and I close out the position, and I bank this 100 grand. Now, some of you are thinking, oh my God, this guy's the luckiest guy in the world. Unfortunately, I didn't say it ended well. I said that was my best trade ever. I decided to learn more about the company. And then I thought I should invest in this company. And it kept going up, and I bought more. And I followed that darn thing almost all the way back down, hoping it was going to go back up. And I did end up profitable, but nowhere near the 100 grand that I made. So that was a very valuable lesson too. Sometimes you got to take your profits and just move on.
Would you believe me if I would have told you that I would have taken profits?
Oh, I believe you. I think, and I think that's because you're definitely more disciplined than I probably am. And you are definitely more disciplined now than I probably was in my 20s.
Yeah.
It's
an evolution that we try to talk about when we talk about stock market discipline and, swing trading that you just talked about. That's just one discipline of many that you can use in the stock market. And,
let me say for the record, I would never do that kind of trade today. Putting out a $100,000 position on a stock that I don't even know and that I have no downside hedge. I mean, I didn't have a put. I didn't have any kind of hedge, even creative. I mean, absolutely nothing. It was looking back on it, it was a stupid thing to do. Shorting Ameritrade was a stupid thing to do. I would never do those trades today. And so, and I do a lot of risky trading today, but I hedge very well. And, but those type of trades, that's a young man's trade.
Perhaps. I think a lot of young people, as you put it, give away the farm, and they spend a lot of their times making their way through those mistakes as opposed to just kind of maybe circumventing some of them.
Right.
And really learning what works, because, our young people, they all have the same ace up their sleeve, and that's time. Right. So all they really need to do is think about not outthinking the market, but just becoming a participant in it. And Vanguard allows you to do that,
I'm a huge fan, and I'll say this, I'll preface it by saying this. I don't do the type of investing, Ryan, that you do, but I've been watching your videos, and I was on your live stream last week, and I actually look up to people who invest the way you invest, because I really think you look at it as a business, and you're heavily involved in what you're doing. So, you're making calculated decisions. You're taking a risk, but you're taking a risk in a methodical way, and you're taking advantage of downturns. And in long term, people who invest the way you invest, and the way probably a lot of your viewers invest, is actually what I believe is probably the best type of long term investing, especially if you're younger. Because you have just tremendous time on your hands, to make money.
I think it's specific to the individual. I do. I really think we can talk generalities in investing a lot. with dividend growth strategies we talk a
Yes.
lot about on the channel. We talk about passive investings. I
Mm-hmm.
usually try to corral the investing decision or discussion around those two strategies, right? Those typically fit very well for anybody,
Mm-hmm.
but I would go one deeper a little bit, and I would say anytime I feel like I'm getting a little bit over aggressive, that's me talking. But as far as the
Right.
money that I'm investing, it's for my kids. So I
Right.
always take that perspective, right? So if I, it's all about the program for me. It's not
Mm-hmm.
necessary. Like I expect results, David. I don't invest to not render results. And I put plans in place every single day. I put one in place today. I'll render results on Monday. I guarantee it because I expect those results. But
What plan did you put in today?
swing trade on Amazon.
Awesome. Good for you.
Sure,
Good for
sure.
you.
Yeah, it'll be one of many from this year. That's just one example of the
Mhm.
channeling. It came up in the thread a little bit because they want to know my channeling activity now, and
Mhm.
I'm a little bit more defensively or cautiously optimistic having this market run off the bottom the way it has.
Right.
So where it was shooting fish in a barrel at the end of March, it's
Right.
not that way now anymore. We could really start to kind of slide a little bit. Now, if the Amazon trade doesn't work out, I'll get long the stock. It's fine. But I don't swing trade anything other than quality. That's it. I don't dabble in that because I have no problem taking Amazon into deep water. I have no problem with that.
Oh, absolutely. And I would too. Amazon, I don't normally do a lot of trading on Amazon, and probably the main reason is 'cause I like to hedge with options, and it's a very expensive priced stock. So,
Yeah.
you obviously you're playing with fewer shares, and if I want to hedge it, you're hedging in multiples of 100, and so
Yeah.
you're having to put a fair amount of capital up on a single trade if you want to. For me, if I want to trade Amazon correctly, I trade a lot of Apple. Swing trade a lot of Apple. I do.
Sure.
I love the SPY ETF and the Diamond ETF.
Absolutely.
Man, when the market was really going crazy there and just dropping, 1,000 points, 2,000 points a day, I was swing trading the Diamond and Apple and doing very well. And I was actually trading them. I don't know if you ever talk about this strategy, but it's something I do a lot. I love it. Definitely not in the wheelhouse if you don't understand options and risk, but I'll throw it out there. It's something I do a lot. So, like, let's say that Apple takes a really big drop, so you're watching Apple, and for me, I was watching Apple, and I saw it get down to that 240 range, and I thought,
Yep.
and I was also watching the VXAPL, the Apple volatility, and it was like it was up in like 90. I mean, it was just crazy high, and the premium on the options, because the stock had gone from 330 or so, kind of before everything, but 330 down to like 240. That's a big move for Apple.
Sure is.
And I thought I want to get in, and it had a couple big drop days. And so what I did is I sold a out of the money straddle on a strike price higher than where it was. So basically what I did, the stock price is at 240. I went to the 255 and I went out, I think, to the September of this year, and I sold the straddle. And I mean, the premium on it was huge because of where, I think the premium was almost $70, to sell that straddle. And so remember, I'm buying the 250, I'm selling the 255. You take 70 away from that, and that takes me down to what, 185?
Mm-hmm.
Meaning that even if Apple goes all the way down to $185 a share at the when my option expiration, I haven't lost any money.
Yep.
And it's currently trading at 240. Well, guess what happened? The next couple of days, it did a short-term rally. And what happened in that situation is twofold. Number one is that Apple rises in value, coming closer to my straddle strike. And that means that I'm making money, right? Because the delta, and I'm thinking off the top of my head here, is it the the delta on the put, I guess, is higher. And so it's making money faster, and the put that I sold. And so as the stock is rising, I'm making money there. But remember the VXAPL and the 70. Remember that implied volatility at that time, with the market changing 1,000, 2,000 points a day, is sky high. And so when the stock kind of stabilized and started to rise, implied volatility imploded, kind of like an earnings call. And so even though the stock didn't move a ton, I think it only moved $5, I ended up making about $15 in premium. And so ended up being a really good trade. I also did that a few days later on the Diamond ETF, and again on Apple about a day before we hit our low there. And actually since then, I haven't been doing a lot of trading. I tend to come in and trade infrequently. I tend to like high volatility trading. So if I see a great opportunity, like a stock is taking a big drop, that's when I will typically do a straddle play like that, a volatility play.
Subscribe to Dave's channel.
Yeah, and if you and let me just, if you can put us both back on for a second.
Of course.
Yeah, I don't want to be cheesy.
That's pretty cheesy, man.
Yeah, I mean,
you can't patch.
You have to be cheesy when you have 610 subscribers. Anyway, if somebody's listening and they actually do want to subscribe to my channel, it's at flippingacademy.com. So
thank you for that.
Like you're flipping houses, flippingacademy.com. Or you can just look up my name, David Oldenburg, and there's actually 2 channels under my name. One is an old one that I had, that has a bunch of dumb videos.
I saw
and
that.
Then there's the other one. The one that you would want to subscribe to or check out is the one that has, like, I think it's 613 subscribers. I think
that's the one that I just put on the screen, right, Dave?
Yes, it's kind of
that's the right
looking
one. Mm-hmm.
Yeah, kind of purple looking.
Yeah.
And
we've got a ton of options connoisseurs. I've got Hidden Freedom Investing, and then I've got Retire with Options, who's also been trading options for many, many moons, Dave. So,
and I don't know if you have people. I don't know if you have people that trade that have their own channel here. But yeah, I mean, I always wanted to collab with other people. I mean, I know options trading inside and out. I've been trading options heavily for about 23 years. And so I know options very well, and that type of thing. And I'll be honest, I'm not a big dollar trader. Like when I was talking about the strategy that I did on Apple, and I know it sounds really impressive, but I did that, and I would love to tell you that I did that on 230,000 shares, but I did that trade literally with 100 shares. Just one contract.
One contract. Yep.
Well, I guess it's 100 on each side. It's a straddle. But I didn't risk a tremendous amount of money. And some people might say, well, why? I mean, it had been beaten up so much, and here's why. Because even though it had been beaten up so much, and I thought for sure it was going to bounce higher, this thing had just come down $100 a share, and the market, the VIX was at 90, and I thought to myself, I can't be stupid, because if I put this trade on and then Apple drops another $50, I want to have a lot of capital to do this trade again and kind of dollar cost average my straddles, so that I can make money on the way up. And so just keep that in mind. I mean, I make my money primarily on the real estate investing, flipping houses, wholesaling, giving advice. I also loan my own capital at times to other flippers, which is very profitable. In California, the going rate is about 12% interest to borrow money on a flip, with 3 points, meaning that you'll make 15% on your money in a very short period of time. And so I loan, when I'm not flipping myself, I'm loaning my money to other people that are doing this. And so for me to make 15 or 20% on my money in a year annually, I can do it with my eyes closed, not even trying. And so when I invest in the stock market, I know that it's a lot harder to make 15 or 20 or more than that easily in the stock market. So I play, I have fun, and I love it, but I'm not doing trades big enough. you're never going to see me come on and go, man, I made $300,000 yesterday. I'm going to come on and go, I did a trade and I made, 4,000, and it was a great trade. Exactly. And I'm going to be really happy about that.
Exactly. Yeah. It's all relative. You take those little wins and you move on and live to fight another day. I think that's awesome. That's a really good takeaway, because I do think there's a lot of folks who tune into my message as well, who are just looking to get started too, from, a lot of different walks of life. So I break it down from that starting of just getting that pay yourself mentality, the $25 going into a retirement account to start, that type of thing.
Do you have the ability to bring up Brad's comment? Brad commented, options is gambling. It's like betting. Okay. So Brad, that's a great comment, but it's absolutely false. If you listen to what I just talked about a strategy where I'm using options, and there's no gambling virtually. If the stock goes down 20%, I still make money. If the stock goes up, I make money. I think what you're talking about is what's called naked selling. It's definitely gambling if you sell a call that's not protected, because you could have unlimited risk, and that would be a dumb trade. But the type of trading that I'm doing is and I'm going to be honest here, totally honest. I have never, ever, ever lost money on the type of trade that I just told you. In other words, finding something that's really beaten up, that has high volatility, and selling a straddle a little bit out of the money where I have huge downside protection after the stock or ETF has already had a big drop. So, it is. What's that?
Drop a straddle for me for Boeing.
I'm sorry?
On Boeing right now, 100 shares of Boeing, where it's at.
I don't have it. Are you asking me? I don't have it in front of me. Are you asking me to?
Yeah, it would seem to meet that criteria, Dave. Not to put you. I was just thinking about that today. Go ahead.
Last time I looked at Boeing, I haven't seen it in a few days. Last time I looked at it, it was like 140, 150.
Yeah, 135, 133. It settled at today.
Okay, so here's the challenge with Boeing, and why I might be more likely to do this strategy on an ETF after it's had a big drop like a SPY or Diamond, is because with Boeing, there's also a lot of management unknown, and there's also a lot of production unknown, and we're also in a world crisis where more and more people can cancel the orders that they have, and so there's a lot of debt risk with Boeing, and a lot of I don't necessarily want to say management risk, but there's a lot of cancellation risk with Boeing and that type of thing. So let's just say that Boeing, and my guess is that Boeing probably has pretty good premium on its options right now. But let's say it's trading at 133, and do you have the ability to call up the options on it right now?
I don't.
Okay.
No, I don't. Not on this one.
And I don't know what they are, so I'm just going to use a hypothetical here. Let's just say that you went out a couple months and you could it's trading at 133, and let's just say you could sell the 140 straddle or 145 straddle, and let's say you could get $15 for each. So you're at 145, you're protected down to 115. That's a really good strategy if it only goes down to 115, or it stays the same, or even if it trades up a little bit. But where you could get killed on this is that if all of a sudden Boeing starts to tank again based on debt or management or orders being canceled, and then you're going to be in a situation where you're good down to 115, but maybe this thing's trading at 80. And so I probably wouldn't do that trade with Boeing right now. But would I do it with the diamonds or the spiders if we had another big downturn? Absolutely, because I feel that eventually it's going to come back. It's the overall market, and I believe it's going to come back. And then again, I don't mind owning it lower. I don't mind if let's take the Dow Jones, the diamonds. Let's say that it dropped all the way back to 18,000 again, and maybe I had done a straddle play at 20, and maybe I was protected down to 17,000, and I did that, but then it actually dropped and it went down to 16,000 or 15 or whatever, and I've got I'm getting put into that stock at a loss or whatever. I'm okay with that. I'm
Exactly.
okay holding it. I can sell covered calls on it. I can sell leaps on it to make my money back. I can hedge it. There's all kinds of things I can do. So
That's
I would do
awesome.
something like that. Now, I know the trade that I gave as an example was on Apple. And Apple, of course, is not an ETF. But I feel that Apple has so much money. It has billions of dollars, and it doesn't have any. I'm not concerned about Apple's debt, that type of thing. And everybody's got an iPhone. And so I wasn't worried about Apple going down. If Apple dropped, I'm okay holding it.
It's incredible, man. Thank you for sharing your insight, Dave. That's
Sure.
awesome.
Sure. Absolutely.
Yeah, I know I've got Hidden Freedom Investing who's popping in here. I know Dave is big into options as well as Matt. I think if you didn't talk to Matt, I think Matt dabbles a little bit. I don't want to speak for him.
He does. Matt and I spoke. Well, we did a live video, but on my channel. But before that, we spoke about an hour the day before on the phone. And I'll tell you, Matt's a sharp guy. And for his age, what is he? Is he 28? I think he's 28.
28.
I mean, he does these videos on his. I mean, he has like $450,000 in his portfolio at 28 years old. I mean, I'm the last guy in the world to give a guy like that advice. He's doing well, and at his age, even if he's not dynamic, even if he's just a methodical, good investor, by the time he's my age, 53, he's going to be fine. He's going to do very well.
Yeah, good stuff.
Yeah, I love the comments. It's nice. See, what's great about your channel? See, if I do a live stream, nobody's commenting. So I'm on my channel. I'm looking, I'm watching comments like crazy, of course. And for the entire time I'm doing the live stream, there's not a single comment. But now, not that I'm jealous or bitter, of course.
No, and I was on your live stream and you were like, for anybody out there who's still here, and I was like, hey, I'm still here, man. I might have been the only one with Matt's live stream.
You might have been. You might have been. I
was interested.
I get to the end of my live streams, and I look and I'll see. I mean, it's pretty sad. I mean, the other day I did one, and I thought the live stream was really good. It was that one on the cash out loans and all the changes going on. The $16 trillion in equity that people aren't going to be able to tap pretty soon.
I just caught that
live video.
It was good. It was good.
I got to the end of that video, and I hate to give a trade secret here, but man, I looked and there were 4 people still watching. And but I get it. I've built big audiences many times. I did it in radio. I built a huge audience in radio. I built a big audience in the mortgage industry. I built a huge audience in my real estate investing group. On Google Plus, like I said, I think 50,000 when I started, close to 100,000 when I left. I'm used to building big audiences, and I'm okay having 613 subscribers. Now, if you have me on your show in a year and I still have 613, I'm probably not going to be happy, but I'm okay with it right now.
Absolutely. Nah, just keep on grinding, Dave, for sure. I appreciate the heck of you coming onto my channel, and for what it's worth, if you get a little bit of a boost out of it, that's one thing. But remember, it's about the quality of those connections and the network that we talked about at the top of the stream too. So, and I'd put this group up against anybody. That's kind of what keeps me coming back. If I didn't feel it, I wouldn't do this. And I openly say that many, many times over. And I've got other things to do as well on a Friday, but I choose to do this. I look forward to doing this. It's an awesome thing to do, and it helps bring people together. And I think the investing landscape, you said, oh, you're 42, Ryan, and you're in your 50s. The landscape's changed, Dave.
Yeah,
it's changed. And I think, and from an international perspective, I've got people that tune in to me and they're like, Ryan, we can't do what you guys have the opportunity to do. So, the irony in that is that we have people in the United States that aren't willing to take advantage of opportunity. And that's really sad. The difference is this group, I open it up free of charge, right? So you're voluntarily coming in here and consuming this content. And I won't apologize for it because of that reason. You said it yourself. Each and every one of these people are looking to improve their own personal posture in one shape or another.
last Friday was the first time that I watched this live stream. And so I was a fly on the wall last Friday. I got to sit back. I wasn't on. I got to just kind of watch. I was watching the comments very closely. And I thought, wow, you have some amazing people on this channel. The comments that I saw were, I mean, some really smart people. The interaction was good. People seemed really friendly to each other. I mean, you've built a really, really good. Oh, I've got 614 subscribers now. Yes. Thank you. Thank you. No, I mean, you have a good loyal group here. And obviously you told me the other day, it's done nothing but grow and build, so I mean, it's a great thing. I mean, one thing I said the other day, and I think this is true even more so in the time that we're in right now, and make no mistake about it, it's a very crazy, unprecedented time. If anybody tells you that they're calm and they know why, nobody knows what they're doing right now. We're in unprecedented, uncharted waters. Nobody in the government knows what they're doing. There's no playbook. There's never been a playbook in history for what we have going on right now. So it's okay to be anxious about stuff and everything like that. But my point with that is that I think there's a lot of people right now that are looking for people to lead them. They are looking for people that they can look up to for their investing, for their real estate, for their just how to get by and how to make money and how to, hey, if my job doesn't come back, what am I going to do? And, and let's face it, for millions of people, that is going to be a reality here in the next couple months, that their jobs that they think they're going to have, that they think they're furloughed right now, they're not coming back. And I know that because I'm out there talking to all these business owners, and probably 15% of the business owners that I'm talking to, they're saying, I'm done. I'm never reopening. I am done. Another 15 or 20% are telling me, hey, Dave, I'm going to reopen, but I'm reopening with a quarter of the staff that I had before.
Yep.
I mean, it's a different landscape. We talked about, defaults on mortgages, maybe going as high as 20%. It's crazy out there. And so my long-winded way of saying this, Ryan, the people in your group, they need what you are doing. They need a forum like this where people can come together and share ideas and figure out how to do things and get ideas from each other and network with each other, because that's what it's really all about at the end of the day.
I concur. And I will also add to this, there's a lot of people who don't know what to do with their time. Yes. There's a lot of people who are like, I'm bored. I feel like I'm getting depressed. I'm looking at it and I'm like, no, I just flip the switch off of one of my projects, which is my full-time career. And I do what I got to do. And then I move on to the other 6 projects I've got, man. Yeah. I told you, man, I don't have enough time in the freaking day. And I'm working diligently and laser focused on my projects when I'm doing them.
You're still in the military, right?
I am.
Yeah. I mean, hats off, man. I applaud military guys. I told you, I come from a long military background. I was the one that broke the mold, that made everybody unhappy. My father graduated from the Air Force Academy, went into the Air Force, had a great career. His father was a bombardier on a B-17 in World War II, shot down 3 different times over enemy territory in World War II. All 3 times was able to get out and do more missions, come back to the United States, raise a whole family, and live a great life. My grandfather on my mother's side was a B-17 pilot in World War II, shot down multiple times, made it back with over 50 missions, and he died just a couple years ago at 94 years old.
God dang, man.
I have a huge military. I love the military, respect the military. I know the sacrifice. I grew up as a military brat on military bases. And so definitely want to applaud you for your service. I appreciate it.
I appreciate that. And I will just say, I guess from the other side of the perspective, I freaking love what I do, man. I love it. And
that's awesome.
This project is just that. It's a project. And I've always said it. I don't do YouTube for a living. That is the God's honest truth. It's the truth. I do this because I want to. I've said many times when I go through my ebbs and flows of motivation and I don't want to do it, Dave, I don't do it. Okay. I wait for my ideas to come naturally.
Mhm.
And when I want to put something down, I throw down. It's that simple. But I really, really love my job, man. I really do. I love every aspect of my life, my family, my career, my side hustles. If I could play guitar, I think that would just be a lot cooler. You know, I've tried to do that for 25 years and that just baffles me, you know,
I
but
know. I'm the same way. I watch these guys play guitar that are really good, and I'm like, how the hell do you get your fingers to move that fast in that small of an area?
I
It's
know,
like,
right?
I
It's
just,
so funny.
yeah. I
It's
mean, it's
just,
like, for me, it's like, I'm trying to get the dexterity, to work my phone. And there's guys doing stuff like that. No, you talked, you obviously, one of the things that I really loved about when we reached out and talked for the first time, and you sent me an email and you talked about yourself and you sent me a picture of your family at the bottom, and
absolutely.
that's the type of thing. I mean, that says a lot about character. That what you're saying is, hey, I'm this business guy and I do this YouTube thing. I got all this other stuff I'm doing, but here's something that's extremely important to me, and it's my family. And I'm the same way. It's what's today? Today's what's the date today?
Today's Friday, May 1st.
May 1st. Okay. In 18 days, on May 19th, coming up, I celebrate my 25th wedding anniversary.
That's what I'm talking about.
Yeah,
Congrats, man.
I've been married to a wonderful, beautiful woman for 25 years. We have 2 kids.
Me too.
Kids. We have 2 adults. My son just graduated
Yeah.
with a bachelor's degree a couple days ago. My daughter, my youngest, she's 20. She had just finished her associates and she's transferring to a 4-year coming up. So big into family, and I think family is all part of that investing pie. Where I think when you're balanced in your life, you tend to make better decisions with your investing.
100%. My very first blog that I put on, that I introduced within the first couple minutes, it's called Inches Forward, and it's just a quick snapshot from my perspective on this very topic. Because I just think that so many people pursue with ferocity one aspect and they leave everything else on the table, whether it be, your health, your spirituality, whatever that means to you, taking real appreciation for things that happen when they happen,
And I can't agree more. I mean, you have to really, one thing I've been seeing on Facebook, I'm on Facebook. I'm like a lot of people on Facebook. I have 5,000 friends on Facebook, meaning that I get 10 likes per post because that's just the way Facebook works. But but I love reading. I'm reading everybody's reading down my feed, and I'll tell you what I've seen a lot of. It gets back to that looking for leaders, looking for strong people, and I'm really talking to. I'm talking to you, Ryan, but I'm talking more right now to everybody that's watching right now or that may watch this in the future.
They will.
You need to lift other people up. Even if you're having a down day, because I've had, I think, 3 people that I know commit suicide over this COVID-19 thing and being depressed in the last 2 weeks.
I know.
And so, these are good people. These are people with families.
Absolutely.
But what's happening is people are getting scared. It's the unknown. And they're like, I lost my business. I don't know what I'm going to do. I don't know how I'm going to support my family. I can't handle this stress and I can't start over at my age. And I think we need to kind of get out of it. I see so much of a blame game going on right now. Everybody is trying to blame somebody else. I think we all need to just go, hey, it doesn't matter. It doesn't matter how we got to where we are. It doesn't matter politically. It doesn't matter, from a religion standpoint. It doesn't matter from a race standpoint. It doesn't matter. What matters is that we all have to get this country rebuilt and back to work and get things going again. Otherwise, this conversation that we're having right now about investing and everything else, it's worthless because there's not going to be anything left. Yeah. We just have to get back in there and lift those others up. And I'm trying to do that every day now. I'm trying to go into Facebook and look and find at least 15 or 20 posts where somebody, seems kind of down or they're talking about a bad day. And I'm spending, I'll write a long-winded, hey, I love your feed. I love your stuff, man. I'm here to talk to you if you want, and just lifting people up, because at the end of the day, it's good for them, but it's also good for me, to establish those connections with those people.
Amen, man. That's awesome, Dave. I really appreciate that. So, hey, Dave, just a time check on the live stream. So I typically try. Last week was kind of a special treat for me because I had Matt Money and we kind of had a heart-to-heart at the end of it. So 2.5 hours into it, we were still going strong rapping. He's probably laughing right now at me. But I do have another guest in here that I'd like to bring on. And but I tell you what, man, just what I told you after I got off the phone with you, Dave, that was an hour and a half that I can't give you back. But I just want to tell you how much I appreciated that. I really did. And I hope some of the viewers saw some of that. I know your subscriber count go up. I've said many, many times, I don't put value in that. I don't. If you said what you meant about the network and the connections, you're on my wavelength, because that's right where I put all the value. And not everybody sees it our way. All right. Not everything is great in the world. Okay. And I'm really looking hard to kick over those rocks for those people that really bring a lot to the table and have some compassion for others, Dave. And I really felt like you were in there. And so if it's a personal favor to me, or if it's a personal initiative of yourself to go over and support Dave's project, it would be a personal favor to me to do so, man. Dave, thank you so much. You got an open invite on the channel, certainly, and I can speak for my community. I'm sure that they appreciated all the stories and all of your insight, man. It was awesome. I sure did.
Hey, Ryan, definitely thank you. Thank you for having me on. It's great. I would have come on if you had 2 subscribers, just simply because, hey, it's a Friday night. I have no life. And, and I would have come on and done this. My wife has actually been glad to have me out of her hair for an hour and a half. So it's worked out well. Real quickly, in the rare and unlikely event that you watched this and thought, I'm actually going to go subscribe to this guy's channel. Again, not being cheesy. Actually, it is cheesy, but it's flippingacademy.com, or my name, David Oldenburg. And I'll definitely be watching your videos. I've been watching them and watching your live streams in the future. So Ryan, thank you so much.
You're welcome, Dave. Thank you so much, man. Have a great weekend, my brother. Thank you.
You too, man. Take care. Bye-bye.
Later, man. Yep. I'm going to bring Connor on right now. Connor, I've seen you in the stream. Can you hear me okay, brother? I do apologize for that. And what I will say is I really wanted to – I had a really good talk with Dave, and I just wanted to make sure that he had that opportunity to address the group for the first time. I've got a lot of people that come on my channel multiple times, and I love it. And if I could jam-pack everybody in here within 2 hours, I would, but – 2 hours goes by fast, man. It's the fastest 2 hours of my life, brother. But thank you for coming on. You want to talk to the group and just kind of introduce yourself and let me know where you're hailing from and what you bring to the table as far as investing. Yeah.
I don't know how I'm supposed to follow that up.
Right. I know.
That was incredible.
Me either. God dang.
Yeah. But no, I've just, my name's Connor. I'm based in Orlando, Florida, and I've been a longtime watcher of yours. And, recently, I was tasked with the challenge of leading a little financial course at the church that I'm a part of. And I ended up with 22 students, and it was successful. And so through that, I was just feeling inspired to try to get plugged into the community here. So just happy to chat with you a little bit.
Amen. So what was and I just want to premise this too, Connor, since you're in on the end of the live stream, I want you to take advantage of it. And if you have the opportunity to roll it forward on the next live stream, come in at the top of the stream. Okay. Take me up on that. That's an olive branch. And I would expect that you take it because this is kind of the 9th inning, which I'm a diehard fan. I don't have a choice. I can't leave the ball game, but I'm almost tuned to say that at the end of these live streams usually is where some of the best magic happens, to be honest with you.
Got it.
But with your church group that you're teaching, and are you guys looking at budget more, or basic personal finance, or stock market investing? What's your angle there, Connor?
Yeah, so we started off talking, I felt that it would be irresponsible to, teach people about investing if they don't have their budget figured out first. So we talked about just the basic budgeting and debt reduction strategies. And then we got into, I just found that I think it's a shame because there's so many resources out there, like your channel, for example, that really make this information accessible. But I think people struggle to kind of take the initiative to go down that rabbit hole, and they view investing as just very intimidating, even though there's a wide variety of products out there that anybody can quickly access. And so it was really just about introducing to them, a lot of them had 401ks, but they couldn't articulate what their money was doing and where it was, placed. And so I had some great stories that came through it. I was blessed in that there were a lot of youth that joined my group. And so I had one guy who was 21 years old, and he had followed the recommendation of a family friend, and he was investing in a mutual fund, but it had a 5.76% front load fee plus about a 2% expense ratio. And after I, kind of walked him through, these low cost ETFs that are out there, I think about over the course of his investing career, which is likely to be somewhere around 40 years, potentially the tens or if not hundreds of thousands of dollars that he's going to save. And I just thought, there's a lot of young people out there that are trying to do the right thing, and they're trying to listen to grandpa, or they're trying to listen to, their uncle. But maybe grandpa or uncle isn't hip to the low cost ETFs or the zero commission trading that's out there. And I think that's really the value I was trying to bring to the group.
How old are you, if you don't mind me asking, Connor?
32.
You ever think about starting a YouTube channel?
I have, yeah. And really, the goal with me going through this course was to kind of prove to myself that I could commit to a sustained, multiple week process, and also get feedback from people.
You're going through it as a student, or are you teaching?
I'm teaching. We just finished. Monday was my last session.
Yeah, so Dave Ramsey does something kind of interesting. We run that in the military. It's the one of very few, if not the only, course that is kind of sanctioned, I guess, for lack of better terms, that we can offer. It's all budget, right? So they get everybody together, and couples are encouraged to attend, and they take account of the debt that exists at the beginning of the course, and then the debt that's been able to be eliminated over the course of, I think it's a 10-week deal. So just over a couple months of once a week meeting and doing that. And it's amazing how much difference in that short amount of time. And we're talking tens of thousands of dollars worth of concerted debt that is eliminated just by paying attention.
Right.
And I think you hit it on the head. I couldn't agree more with, I was agreeing with like a half a dozen things you said, and then I stopped counting because you said too much. But the thing that I mean that as a compliment, I just thought when you said that most people think that investing is somewhat intimidating, it is.
Yeah.
But I've yet to really understand why. So I'm a hard guy to I guess rationalize with that, or somehow articulate that. I do my very best trying to pulverize this topic into the ground so people at its core really understand. Look, you need to tell me why you think it's so complicated first, and then we can go through each of your concerns and really say, you know what, maybe starting an account really isn't that scary. It costs you nothing. There's a lot of no cost initiatives, like gaining a little bit of, like you said, something about budget. And I typically don't like to use that word. I typically like to use the word discipline.
Sure.
Because in the grander scheme of things, if you don't have discipline with everything that you do in life, then finances is probably going to be no different. How in all honesty are you going to tackle this topic if you can't demonstrate some level of discipline in some of the other areas of your life, right?
Right.
So,
Absolutely.
so discipline is key, I guess, but it is also the most shallow. What I mean by that is it's amazing what somebody will discover when they put pen to paper and actually really write down what their inflow is and what
Mhm.
their outflow is. It's amazing. It's
Yeah.
revolutionary. Like it's like an epiphany,
Yeah.
and they're like, wow, this is crazy. Like, and all we're trying to do is carve out $25, Connor. And some of these carve outs are much larger than that. And then you run them through the compounding exercise and just kind of show them the power of money as it works for itself.
Yep.
Not you work and trade your time for X number of dollars and perceive that to be the end all be all of your life. The more money that you can kind of circumvent from your inflow and outflow discipline and put it in an opportunity to work while you're sleeping. Because while I'm not at work, I'm a bad example, but an hourly job is a perfect example of trading time for money. But my investments are working all the time. One day closer toward a dividend, a drip,
Yep.
one day closer to capital appreciation, one day closer to whatever it is that the money is organically working. So I will continue to push the envelope and really try to speak in a way that aims to simplify this topic, because I think it's more simple than people give it credit for. Again, I'm just a bad example because I try to separate what I understand about personal finance and discipline and life things, and I really try to put myself in the position of a new investor who's looking back at me and saying, like my brother just did it to me last week. He's like, Ryan, I watch your videos and I don't know what the hell you're saying.
Yeah.
And it's like, oh man. I was like, man, you're my brother. Why don't you just pick up the phone and call me and I'll explain it to you in your way? What
Yeah.
are you trying to get? And it's like, is that indicative of the way other people feel through YouTube? And I was kind of like, wow, that's too bad, because as much as I try to revolve around this topic in a number of different ways, provide scenarios, provide justification, rationalization, easy steps that you can take, and you don't have to take them all at the same time. I think that's part of it, is that people try to do everything at the same time. What did you hear from your students in the group about what they thought that they were going to get out of it and maybe what they ultimately got out of it, Connor?
Yeah, I think just to kind of touch on what you were speaking to really quick, I think part of the key, and I see it, watching your live streams every Friday. It's become part of my routine every week. Is I think you kind of have to understand the language of investing. Like, even just when you were speaking to me now, you referenced drip. Someone would need to be inclined to pause the video, go look up drip.
Yeah, sure.
And when and so I think there is value in having somebody who's willing to invest in you and teach you the language of investing so that you can connect those dots and make smart decisions. What I found was I had a lot of success teaching people through the usage of analogies. So we would talk about, the importance of having a strong foundation in your portfolio of ETFs, right? Because a lot of youth, they're not entering into the market with $50,000. They're entering into the market with $100. And so the importance of being able to get that immediate diversification. And I taught them that in terms of, hey, imagine the stock market as a grocery store, and you're going up and down the aisles, and the ETFs are like your essentials. Like, you're not going to be able to make a meal without milk, eggs, cheese, onions, garlic, right? And from there, as you enter into these ETF positions, you're going to reaffirm this hypothetical risk tolerance that this Vanguard survey said you have. And from that point forward, it may instill confidence in you that, hey, you know what, this VYM fund that I'm in, I'm liking what I'm seeing here. Let me take a look at the top 10 holdings, and maybe I start dabbling in individual stocks, and I'm attracted to a Home Depot, for example. So I think that the key for us to be able to attract more people to participate in the market is to use language that they can connect with based on everyday experiences, and to avoid we have a tendency, as we get passionate and get excited about participating in the market, to speak a little bit more technically. And I think that that is where I would kind of find that I would start to lose engagement in my course.
Wow, that's really incredible, man. I will take that and deploy that in my repertoire. And it's hard for me too. I've been doing this my whole life, and the stuff that I'm looking to get edgy on is the stuff that I'm looking to improve upon, because that's just my nature. So that stuff that's like kind of elementary investing lingo, that type of thing, it kind of comes naturally. But we will continue to really drive. And I think you're right. I think a lot of these millennials, they want to do the right thing. They want to get started in the right. When I started, ETFs didn't exist. So they may have existed. I sure as heck, I didn't have access to it. My first access to the stock market was through my church as well. When I was, it used to be AAL, and now it's Thrivent Financial is actually the entity that it's evolved to now. But that was my first introduction, and it was a financial planner as well. And in retrospect, that was the only opportunity that we had. Now, my goodness, you have every opportunity at all to hold your personal finance portfolio in the palm of your hand. That's incredible.
Absolutely.
And, so, I mean, what do you feel like you made some really good progress with the group, Connor?
Oh, absolutely. Yeah. I had, I shared the one with you, we uncovered some high fees in the mutual fund, but I think the most incredible story was one kid who was in the group. He's actually, I think, 19 years old. His father unfortunately passed away and left him about $40,000, and he had that money just sitting in a savings account that wasn't even coming close to keeping up with inflation. And so I taught him about the Roth IRA, which is magic for young people, particularly. And it was great because he came back to me after the course, and he maxed out his 2019 contribution. He backdated it, got it in before April 15th. And I showed him, a calculator where it's like, if we just keep up with the average rate of return on the S&P 500, you being 19 years old, this $6,500 that you've put into this account, by the time you're, 59 and a half, is going to be worth close to $200,000 with a drip. It was just like mind blowing to him. And so that to me is, I hope that someday I get a call from one of these guys and with just a thank you, it'll all be worth it for me. But I think you also can attest to the best way to get better at something is to teach it. And so I really got a lot of value out of being accountable to come to that group every week and deliver engaging content to them.
And what a privilege to have you on, Connor. And again, I want you to take me up on my offer, please. I'd like to have you on for another live stream. I'm pretty solid on this Friday thing. I find myself really looking forward to it.
Yeah, me too.
I love doing that, man. I really do. Initially it was kind of a strategic risk for me. And, the truth be told, and I'm most often interested in the truth. This initiative, a Friday live stream at 9:00, isn't about the money at all. Most people who know YouTube know that I'm 100% right on that. It's not. It is absolutely about the network and the communication. And I don't know who from week to week is going to pop on. I knew Dave was going to pop on, and that was really cool. And I was watching you sitting there in the stream. I was like, I got to get this guy on, but I got to find a good inject to fit in as much action as I can in 2 hours. But I thank you so much for sharing that. I just think it's incredible. And I love talking to channel creators, but I also really, really enjoy when subscribers to the message come on, and there's no way for me to quantify, Connor, the subscribers who tune in to my message. You said that you've been watching me for a while.
Yeah, about a year.
How am I supposed to know that? You know,
Yeah,
you leave a few comments and say hello, but until I can put a face to a name, like I did on Wednesday with Randy and Retire with Options,
yeah,
that's really where it hits home with me, and just a personal, a personal inject. That's really what means everything to me, anyway.
sure.
I'm personally fine, but I get a lot of satisfaction out of really hearing success stories like that. It sounds like you impacted. Oh,
I did, yeah, and I wanted to just quickly thank you for the value that you've added to my life, and I really appreciate the opportunity to come on and chat with you briefly, and I'll definitely be back.
Do it. Please come back, man. We got a lot more to talk about, Connor. Awesome.
Absolutely.
Thank you so much for coming in, and we'll see you next time for sure. All right.
All right, take care, Ryan.
All right, brother. Take it easy.
Bye.
Bye. Get 5 minutes by myself to talk to the group. So I do want to thank the dialogue tonight. You guys kept the discussion extremely lively while I was trying to monitor and conduct the interview with Dave. Anyway, I thought it was probably best to just sit back and listen. And if you guys didn't understand what I was doing there, I become a student, honestly. And when you can be a leader and you can also be a follower, that's really where you figured something out in life, where you can really, really listen and hear somebody's life story. Dave didn't have to come in and share that. He didn't have to do that. He did. And I kind of pressed him a little bit tonight and said, hey, man, you're my featured guest. You got to come on. I think it'll be worth your while. And I don't get to make that call. He does. And I would think nothing less than to have him look back on the first time coming on the Independent Investor channel and spending time with you fine folks as one of those things. I just noticed that we're up over 250. I seemingly remember a promise that was made in the group. So we'll see how freaking loyal you guys are next week. And the person who's on the receiving end of this message knows exactly who he is. So might be time, perhaps, maybe to come on as a featured guest. I have 272 in my live stream for under 2 hours. So fantastic. Again, it was one of the very first things that I did at the top of the live stream. And that's just to thank you guys for your devotion. Honestly. Yeah, Matt Money, I got it right. That's right. He's guessing in my thread, just guessing, but I was pretty direct, honestly. Last week was a treat for me to have some heavy hitters as far as I'm concerned. Kyle with Passive Income Investor, and Matt with Matt Money, and Jason, who I failed to mention at the end of that stream. I actually felt pretty bad that I didn't thank Jason, but he knows how much I appreciate. That's why he got a nice call out at the top of the stream, and I just appreciate the heck out of everybody's efforts and staying safe for sure. We will continue to roll this out. You guys need to understand the reason why I do this live stream in the fashion that I do is that I like that aspect of wild card. Okay, I like it. It makes it a little bit less predictable. Okay, I don't script these live streams at all. If there's a live guest that wants to come on and throw down, I have no idea who it's going to be. Me, from my perspective, it's kind of exciting for me because I am slowly proving to myself how fulfilling it is to have somebody like Connor, who came on tonight and was the latter guest after Dave, how fulfilling that is to me. And it certainly fuels my fire to continue to roll out the message in the fashion that we do. I rolled out the website as well. I saw my iMac just absolutely smoking tonight. So I'm encouraged to see that you guys take a few seconds and go over there and at least browse through. If you have some constructive criticism for me, if you've ever heard any of my message and you appreciate the time and effort and the monetary investment, quite frankly, into the channel, and a lot of these other channel creators will attest, we don't do this for free. We don't. We make substantial investments into our companies, and in my particular case, it is a company, and so just those small injects of appreciation are. They don't go unappreciated. And when I throw it out there, I throw it out there for a reason. We sure do appreciate the support. It's just another angle of me offering a small blog article every so often when I get those small injects. And some people would rather consume their content, I think, through a written article. So with that said, guys, I think I'll wrap it up. I hope you appreciated the mix of diversity tonight in the live stream. If you haven't come on and been a guest of mine, I know I saw Minds in Motion pop in after I could give the shout outs. But some of you folks that haven't been on the channel for a while, you know, schedule it out. Make sure that you're getting your slot, because what I told Dave is I think he would agree now that he's glad he came on, and hopefully you found it to be an enjoyable experience for sure. And hopefully you guys got some benefit out of it as well. Have a great weekend, guys. We will see you back next Friday on the Independent Investor live stream. Be safe, be well, and we'll catch you next Friday. Thanks a ton, guys. Be well.